What's going on, everybody? This is Phil from Millennial Money Gains, and welcome to a brand new video. In today's video, we are going to go over a dividend stock that I am definitely adding to the portfolio. This will be the next stock that I do purchase for the dividend portfolio. If you guys are hyped for this video, please make sure you smash that like button. And if you are new here, please consider subscribing to the channel. On this channel, we strictly talk about dividend stocks. So if you're in love with dividend investing as much as I am, then make sure you hit that subscribe button. We post here at least 2 times per week. That's going to be on Sunday and Tuesdays. So make sure you guys are subscribed so you can keep up with the portfolio and all these stock analysis videos. But now let's hop right into the video. So the stock we are talking about is US Bancorp. Ticker symbol is USB. US Bancorp operates as a bank holding company which offers financial services including lending and depository services, cash management, foreign exchange, and trust and investment management. The firm also offers mortgage, refinance, auto, boat, and RV loans, credit lines, credit card services, merchant bank checking and savings accounts, debit cards, online and mobile banking, ATM processing, mortgage banking, insurance brokerage, and leasing services. The company was founded on April 2nd, 1929, and is headquartered in Minneapolis, Minnesota. So the reason I am adding this one to the portfolio specifically is because I need to get more diversified in the financial sector. I currently don't have any dividend stocks in the financial sector. So this is why I will be adding one. And this is the one that I am choosing because this one is to me, trading at a decent discount right now, and we're going to get into some of the dividend stats in a little bit. So it's currently up about 8.2, almost 8.3% on the year. In the past 6 months, it is down almost 2%. So not too much there, but still down a little bit. In the past month, it is down almost 7.5%. So we're getting this one at a pretty decent discount. I do think it has the opportunity to come down even more. So we may sit on our hands a little bit and see if we could get it at a cheaper price. But nonetheless, I will be opening a position. Most likely in this one, I have another name that's on top of my head, which is JP Morgan. I did a video on them last week. But I'm looking more towards this one right here because we're going to get into why. So let's hop right over to the financial section. We're going to look at outstanding shares, seeing if they're buying back some shares. That's very important when you are investing in a stock. You want to make sure that they're buying back some shares and not issuing more in order to dilute their shareholders. So we will go to the balance sheet real quick, and we'll go back and look at the revenues in a little bit. But let's take a look at outstanding shares for now. So waiting for this to load up. Like I said, we want to make sure that their shares are decreasing because that will increase shareholder value. So total shares outstanding in December of 2017, there was 1.65 billion. And of December 2021, there was 1.483 billion. So pretty good there, definitely decreasing. We see a decrease every single year. So that gets a check mark for us there. Now going back to their revenue and just the rest of their financials, take a look at that. So obviously we know that we probably will see a little bit of a decrease in revenue because of 2020. So we need to take that into account. But I do expect these financial stocks and these banking stocks to have an increase in revenue when the rates do inevitably rise. So 2017, they had revenue of $11.9 billion. Then it's December of 2021, they had revenue of just 10.9, almost $11 billion. And it went up all the way up to 2021. So I am expecting this to come up because of interest rates. They will inevitably rise because that is how they are going to combat inflation. So I'm not too worried about that. We're kind of expecting that. So like I said, they do have a market cap of about $82 billion. And that concludes a PE ratio of 10.83, so very good there. Price to cash flow ratio of 8.31. So they do have revenue of almost $24 billion. They have total debt of $46.40 billion and total cash on hand of $31.11 billion. Net operating cash flow of $9.87 billion, so plenty for that dividend. Now, let's go over to everyone's favorite part, the dividends. So, they pay a pretty modest yield of 3.33%. They have an annual payout of $1.84 with a very small payout ratio of 34.51%. They have a 5-year dividend growth rate of almost 10.5% and dividend growth for the past 11 years. So they do pay their dividend on a quarterly basis, and that is 46 cents per share. Now let's take a look at dividend history right here. Waiting for this to load up. So, as we can see, we see consistent dividend increases. So we expect that to continue with their operating cash and with their revenue. We expect that to continue, and that is why I will be buying into this company. That's one of the main reasons, because we expect their dividend growth to continue. Let's go to Dividend Safety. According to Seeking Alpha, they do have a pretty risky dividend of a C- grade right now, which I am not sure why, because their payout ratio is pretty low. I guess that's just compared to the rest of the sector. The sector has a smaller payout ratio, so we'll see. We'll see how that goes there. But let's go over to dividend growth, and I got a C. 1-year dividend growth rate of 4.76%, which is pretty good to me. And I think the 10.5% over the 5 years is pretty decent there as well. Over 3 years, about 9.5%. And over 10 years, it's a little small, 13.41%, but I think they are trying to focus on growing their dividend. So that is pretty much going to wrap it up for this video, guys. If you guys are invested in this company or are looking to invest in this company, just let me know down in the comments. I'm really interested. Or let me know what other financial stocks you guys are holding in your portfolios. This one really stuck out to me. Still crunching the numbers and still doing deeper analysis between this one and JP Morgan. And there's a couple other ones, including Citibank and Wells Fargo. We're going to look through all of those. But I would really love to hear your guys' opinion. So let me know down in the comments section below. If you guys did enjoy this video or took anything from it, please make sure you smash that like button. Really do appreciate it. It really does help out the channel. Check out all the links in the description below. You get some free stuff by signing up for brokerages or get some free Bitcoin. That does help me out at the channel, and it will help yourself out as well. So it's a win-win. Also, make sure you guys are subscribed to the channel. Join the family. About 95% of you that watch my videos are not subscribed. So what is up with that? Make sure you guys are subscribing to the channel. I do appreciate that. And I will see you all in the next video. Peace.